I've spent the last 10 years immersed in the world of finance, a degree in finance, a qualification in accounting, and a high-pressure career in investment banking. But the most life-changing lesson I've learned through all of it wasn't in a textbook, it wasn't from a boss, it was learning how to master my own money, how to spot bad habits, break them, and finally, get in control. So today, I'm sharing with you 12 money habits that are keeping people poor and how to break free from them. Let's start strong. Habit 1. Paying yourself last. I first came across this concept in Rich Dad, Poor Dad by Robert Kiyosaki, and it completely changed the way I thought about money. There are two types of people when it comes to handling income: the poor mindset and the wealthy mindset. The poor mindset gets paid, pays rent, covers subscriptions, buys food, clothes, gadgets, maybe even eats out, and then whatever's left over maybe gets saved, if anything is left. The wealthy mindset flips the script. They pay themselves first, before the bills, before the fun, before anyone else gets a cut. They take 10% of their income, sometimes more, and move it straight into savings or investments, like it's a bill, a non-negotiable, because their future is just as important as the present. This single habit can be the line between surviving and thriving. Habit 2. Living comfortably with bad debt is everywhere. And sadly, it's become so normalized, we barely question it anymore. Credit cards for clothes, loans for gadgets, buy now, pay later for birthday gifts. But here's the truth. Not all debt is created equal. Bad debt, the kind used to fund short-term pleasures or depreciating assets, is a financial trap. You swipe the card, you feel good in the moment, and then interest creeps in. 22% here, 25% there. Suddenly, that $100 item costs you $140. Ask yourself this: would you still buy that thing if it cost 40% more? Because with credit card interest, that's exactly what you're doing. The wealth-minded individual sets one simple rule: if I can't afford it in full right now, I don't buy it. Use credit strategically, not emotionally. Habit 3. No emergency fund or safety net life happens. Unexpected medical bill, job loss, and if you're not ready, those moments can send you spiraling into debt, panic, or worse, total financial ruin. That's where your emergency fund comes in. Start by saving at least 3 to 6 months worth of expenses. This gives you breathing room, confidence, power. Because wealth isn't just about growth, it's about protection. Before you invest, before you splurge, build your buffer. Habit 4. Not knowing your numbers. Do you actually know how much you spend each month? Not a guess, not a rough idea, the real number. How much goes to food? How much leaks into subscriptions you forgot about? How much are you spending on convenience without realizing it? Wealth builders track their income, expenses, net worth, and savings rate. Because what gets measured gets managed. Budgeting isn't restriction, it's awareness. Knowing your numbers gives you control over your story. It lets you make intentional decisions, not just react. Habit 5. Lifestyle inflation. Here's how it happens. You get a raise, you celebrate, you move to a bigger apartment, you eat out more, you upgrade your wardrobe, and suddenly you're still living paycheck to paycheck. More money, same stress. That's lifestyle inflation. And it's one of the sneakiest traps that keeps people poor. Instead, when your income grows, let your savings rate grow too. Treat raises like an opportunity to build, not just to spend. Want a nicer life? Absolutely. Just make sure your financial foundation is strong first. Habit 6. Expensive hobbies and impulse spending. We all have our thing: sneakers, gadgets, concerts, designer bags. And hey, you should enjoy your life. But when treating yourself becomes a weekly habit, it's time to pause. Ask, am I buying this because I value it, or because I'm bored, stressed, or influenced? Delayed gratification is a superpower. Cutting impulse buys doesn't mean cutting happiness. It means choosing long-term joy over short-term highs. Habit 7. Relying on one income stream, one paycheck, one employer, one stream of income. That's how most people live, but that's also fragile. If that income disappears, what happens? The wealthy build multiple income streams: active income, like a job, and passive income, like dividends, rental income, or online businesses. Even small side hustles can add up. $200 a month becomes $2,400 a year. That's an investment or a cushion. Don't put your financial security in just one basket. Build streams, not puddles. Habit 8. Only thinking about saving, not earning more. Yes, cutting costs helps, budgeting matters, but you can only save so much. There's a ceiling. Earning more, there's no ceiling. Start a side hustle, ask for a raise, learn a skill that increases your value. Build both sides of the wealth equation, save more and earn more. That's how you escape financial limits. Habit 9. Overpaying on taxes without strategy. Everyone has to pay taxes, but not everyone pays the same amount. The wealthy understand tax rules. They use legal strategies, retirement accounts, tax-sheltered investments, business deductions. They hire accountants. They plan ahead. You don't need to be rich to do this. You just need to be intentional. Understand how taxes work and make the rules work for you. Habit 10. Waiting too long to invest. I'll invest when I make more money. I'll start when the market looks better. I'm not ready yet. That delay, it's costing you time, and time is money. Start small, start messy, start now. Compound interest doesn't wait. The earlier you begin, the more your money works while you sleep. Even $50 a month can grow into something powerful over 20 years. The best time to plant a tree was 20 years ago. The second best time, today. Habit 11. Avoiding financial education. Schools don't teach it. Most families don't talk about it. And so many people just wing it. But money, like any other skill, can be learned. Books, podcasts, YouTube videos, courses. Even following finance pages on social media can shift your mindset. Knowledge compounds, just like money. Keep learning, because what you don't know will cost you. Habit 12. Thinking wealth is for other people. This is the silent killer of dreams. People believe, I'll never be rich. That's just for lucky people. I wasn't born into money. But here's the truth. Wealth isn't about luck. It's about habits. You don't need to make 6 figures. You need discipline, awareness, and belief. The journey to financial freedom doesn't start with a windfall. It starts with your next decision. You've just learned 12 money habits that might be holding you back. So, which one hit you hardest? Which one are you ready to change? Financial freedom isn't a dream. It's a system. It's a choice. And it starts with one step. If this helped you, like, share, and drop a comment. And remember, your money should work for you, not the other way around.